morning. Welcome to my YouTube channel, philsgang.com and the Phil's Gang Radio Show. It is November 4th, 2022. Job number day, Friday. Yep. So, again, I want to answer that question you have in your head every day. What is the market going to do? Not only today, but in the future. Well, you're going to get the truth here. So let's start. Look at my chart. Okay. First of all, before I begin, the job numbers came in hot. That's bad for the market. The market was up. The implied open was up 225 points. When the hot job number came in, it immediately went down 225 points, wiped it out. And then the plunger team came in and pushed it back up 202 points again, because they have to have this market going up, going into the election, the White House. Okay, so they're going to continue to move this market higher today, and I said this yesterday, and they're going to move it on Monday, and probably even the election morning, they'll move that market up. But let's talk about the overall market. Your question is what the market's going to do. It's going to go lower. It's going to go lower long term. And let me show you why. You see this channel right here? Okay, that's this channel right over here. See it? That's the same channel. You see what this is right here? See how nice and strong that is? That's when we had quantitative easing, QE. What that meant? That means that the Federal Reserve printed money and bought treasuries to make sure the Fed rate, the short-term Fed rate, would go to zero. What's that? Well, the Fed rate is the rate at which the Federal Reserve sells your bank money, and then your bank will loan to you. So when the rate is at zero, they loan the banks, your bank, money at zero, free interest. They don't have to pay any interest or a slight amount. And then the bank's going to charge you when you buy a car or whatever, and the banks make a lot of money. There's a lot of demand. That's where the demand comes in. That's called inflation. So if you look at the stock market, what it looks like over here when you have QE, look at the market. And if you go back all the way to 2008, it looked just like this. So for 13 years, they kept the market rallying on a wave of liquidity by keeping interest rates at zero. In 2008, we were told they were only going to do it for about 18 months the most and stop, because they knew it was inflationary. They knew it's inflationary. So Bernanke said, we're only going to do this for about 12 months to 18, and then we'll be on our way. Instead, they kept it going for 13 years. Why? Because they wanted to keep building that inflation, because the inflation made the very, very wealthy wealthier, because it's called the asset class. And when you have special real estate and vineyards and cattle and all these different assets, you make a lot of money. You want inflation. Okay, same with your stocks. You want inflation. And that inflation is going to kill Main Street. But they kept lying. Bernanke kept telling Congress, and Congress kept saying, well, who's going to do better with QE? Main Street or Wall Street? Oh, Main Street. Lied for 13 years. Finally, you saw we had our inflation problem. It really showed up in COVID, and now they had to do something, and they stopped. They stopped the QE, and look what happened to the market. Collapsed. And when you see these tops right here, anytime you got a stock market lower highs, that's telling you there is nothing that market can do to go up and sustain a rally. That's why you're seeing every day that the big boys, the big institutions, are selling their stock. And then you got the fake business network coming to buying a dip, people buying a dip. And then the big boys sell their stock again. Buying a dip, big boys sell their stock again. Buying a dip, sell them again. Buying a dip, sell again. Buying a dip. All these people buying a dip are getting screwed, because they had no idea what the hell was going on. When you have these kind of lower highs, you're screwed. You can't break out. So how do you break out? If you look over in this chart here, how do you break out? You either got to go to QE, and if they go back to QE like England's doing, you're so screwed, because that means inflation is going to be so huge that we can go into a depression, for God's sakes. What are we going to have for gasoline? Pay $10 a gallon? mortgage. I remember paying mortgages in 1970. I was paying mortgages 18% my home mortgage was. So that's the problem. The only way you can break out of this is, again, QE, or you got to have earnings. Well, you can't get earnings in a market like this. The only other way is let the recession happen. Stop keeping these stocks up artificially. Let the market go down 20, 30% to where those stocks, the valuations are okay now. And if you let those stocks capitulate and let those stocks go down another 20%, the valuations will be all right. Then big institutions come and buy it, and we'll start a new rally, and we'll be fine. But for 13 years, they don't understand what it is anymore to start a rally based on earnings. It's been too easy. So that's where we are. That's why the market's going to go lower, not higher. So that's it. So again, please listen to what I'm telling you. Okay? The market can't break out. Can't break out. No earnings. I mean, look at earnings have been terrible, or we'd be breaking out by now. QE, it'd be a suicide mission. They would put us into a depression. And the banks are going to get worse and worse, because as the yields are going up now, as the yields go up, we're going to have banks are going to have more and more deficiencies. More and more people are going to be going into foreclosure. And we haven't hit the housing market. We haven't scratched the housing market. The housing market is going to be worse than what happened in 2008. It's going to just completely crash. So why don't you learn how to sell short? That's your safety net. That's it. So, you can come to my website, philsgang.com, for 10 days free. You learn how to sell short and how to execute going long when you're supposed to be buying stocks. And why don't you come on November 12th? It's from 12 to 3 p.m. online. I'm going to have a webinar from 12 to 3. And especially for what's going on right now, the crisis we're in, what do you do in the market? And 3 hours. And it's only $99. And if you can't make it, it's archived for 2 weeks. So you got it for 2 weeks. And it's going to be a fabulous webinar, especially for people who really are in the market. It's going to be ideal for them. So go to my store, philsgang.com store. Okay, gift shop, and just sign up right there. Okay, that's about it. So they're going to try to rally the market today. They're going to try to rally the market on Monday, and they're going to try to rally the market going into the election, election day morning, unless, again, something happens. So that's it. But overall is what you want to hear. What's going to happen overall, especially you poor people in 401ks, going to feel a lot more pain. Please learn how to sell short, okay? It works. See you on the charts.